Welcome to TradeTheMBI.com. This is John, this report is for, well, the exciting Friday the 13th. And you can see we've started out, making new highs. We actually finished with new highs, and it's not surprising given what we were talking about, showing that weekly chart. Some people would say a little bit prophetic, but it was an indication that while you hear the stories of gloom and doom, this, that, and the other, there's an opposite side to that trade, and the weekly chart was showing that there's still a building of momentum, that the growth combined with inflation means higher values. There's, that doesn't mean it's all going to be one way without, resets in between. As we saw here, where we reached the peak, did a 50% retrace, that became very attractive to bigger buyers, and boom, we just moved right back up from it. So, this puts us up here at the peak. We're still at rising shakeout. Orange falling. Green is still above red if we look at those numbers, even though it's close. So you can get that kind of a broader sell signal that would have the orange rising, steel falling. At the same time, though, you still have green above red. It means you still have a preponderance of buyers overwhelming what shorts are doing. Now we had that nice little cross. It produced that one little dip when we immediately had it. And then immediately from there, though, you get the orange dip. And every time we talk about whenever we have buy signals, we always look for that rise of the orange as the depressed part of the trade, and that first dip down is usually where we start to see the spark of price rise, and that's exactly how that worked out. Plus zero resistance from the ABM yellow to the 100%. And those are the key factors that you look at. NASDAQ looking remarkably similar now, where it was very much stronger and not coming back down to the lower numbers. Visually producing the same thing, even though you could still say it's outperformed the S&P. When we look at it from that visual representation, though, it's right on course. And of course, then we have the EU situation, the soft Brit exit, Trump criticizing it, criticizing the fact they're not spending enough money. EU's got some issues, and I think that systemic risk that exists within Italy and some of these conflicts will probably start to grow, and there's no interest vis-a-vis the U.S. Fed at this particular moment to be needing to prop up the euro for any particular reason. In fact, with the trade issues going on, in fact, a lower euro could actually be to a strategic benefit, if only the Fed agreed with how maybe the administration would like it, and that's not necessarily going to be the case. Still the crazy trade. People still, and this is interesting because you talk about this great exodus to cash and how many people are pulling out of the market as it's going to highs. Fine, you're going to put yourself into treasuries, you're going to put yourself into liquid means, which would also indicate potentially a move towards gold or oil, and you're not really seeing that. The gold trade was a nice little push. This is going to be about some of it economic growth, but it's also going to add to that inflation factor, even though we're not seeing it manifest in the gold trade yet. But the interesting aspect of it is when you have all of these people supposedly pulling their money out of the market and sitting on the sidelines, if things continue as they are, you're going to end up with a later year situation where they're all behind on returns. And when it comes to trading the S&P for large funds and that, matching the S&P return is everything. And so if you've been on the sidelines at treasury rates of nothing, you're not going to get there. Now, fine, the treasury rate has improved enough that it's given some support, but if the market keeps moving in these directions, so people are going to be then having to chase the situation. This is where the move to 3,000 is so not out of the question. It wouldn't be that difficult. Now that USO, or oil in particular, is reset here on the ABM, we can see it developed a DOC spread right at the point where it began the drop. We would expect it to hold somewhere around this range. I mean, a 50% retrace would not be abnormal. It could go even a little bit lower than that. The fact that immediately upon request, though, the Saudis able to turn up output as far as oil as well as the U.S. is a factor, but again, when you get into refined distillates, it's going to be more complicated, and that's going to create a bottleneck, which will drive gas prices higher, which will slow over time economic growth because it becomes a huge drain. We're already seeing a deficit jump simply because the Fed has raised interest rates, not because the spending, the revenues have been up, but you're seeing the deficit skyrocket simply because the Fed has been active in raising rates, and that's going to have a huge impact going forward. This was a change of policy and a sort of a punishment by the Fed because for the last decade there's been a direct hand that we've seen actually in place of low growth with high immigration, keeping labor costs down, with strong inflow of oil, which was the beginning of the U.S. allowing for use of domestic oil production, and that created an opportunity for the Fed to keep interest rates very low. Plus, you kept the euro high, and that bolstered the situation. Now, with growth and opportunity, that rising of interest rates is really going to be problematic when it comes to a deficit. And so that $20 trillion nightmare is certainly going to move to the forefront if they don't. And even if they do get things under control, it's this, if the Fed decides to raise rates, it will become unsustainable very quickly. And it's an interesting thing because you're basically artificially creating added debt just because you're raising interest rates. Kind of counterproductive for the government, but that's a whole different topic. So you can see gold retracing like we thought it would. At this particular point, though, still has a green over red, and all you really need is a spike up of steel with the continued fade of orange should give it a little bit more support in here. I would expect it to hold this range. It's had quite the move lower. I mean, even if we shrink this chart, let's see. But we're at that secondary base point where you would expect, though, that on a turnaround, the red has got to move above into the new zone. But you can imagine, I mean, you got all these articles talking about how the gold is, in limited supply. We're not finding the new reserves, blah, 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 blah. It's all a bunch of hype, but it's interesting that gold has suffered the way it has. So if we look at the day, it's really clean action overall on the 5K. Dots performed just as we expected. We get that blue dot right here. We ended up with a 50% retrace. We ended up with positive extreme, blue dot, the other yellow warnings, and right at the highs. So another perfect opportunity. Then we ended up with gold candle, but we're already at the 100%. So fine, it went back to the 100%, but that really didn't help anything. And then what do we get? Another move back to the 50. We got them up at this particular peak right here, but the problem was we didn't have any overbought with it. You didn't get the overbought until right here, which coincidentally was at the peak high right there of 93. So in my view, even though this one's at the 100%, to me it's not as attractive because I wasn't seeing algo activity popping in at that particular point, suggesting that they were going to be, making a move off of it. Whereas here we had the specific range from that bar, because with the close up at the 93 and a quarter and a low below 90, you have a decent point gain. We did jump all the way up to 94, so took a point of heat. Was another opportunity at the new high to add into it as well. And then it dipped all the way to the green ABM. So it didn't quite go as low, which showed the bullishness that was existing in there. Went down to 88 and a quarter. And of course, very interesting to see this. And I thought, let me expand this so you can see how clear that white candles at the 100% level. So interesting. Didn't take but seconds for them to be filled back in. And in fact, we ended up with a little bit more of a move. But what became critical here is you ended up with gold above the 50%, not at the high. So this becomes attractive from the standpoint at the 97 range with an expectation to get over that 2850 number. And then you ended up with a little bit of a drop down to 9350. And this becomes a difficult one because a lot of people think, oh no, it's going to break down. Look, the percentages are very good when you end up with these, that they're going to reach at least a fractional portion of that 100%, the 80 plus range. And sure enough, in this case, it reaches the high, makes a new high, then does a retrace. Then as soon as post-market opened up, skyrocket, new highs. So we started to see a conglomerate of positive extremes that were going to need to be filled, going back to the 76, and that began with the very first candle, the next one, and then further up, and then lo and behold, the blue candle came in. Unfortunately, didn't even give it a chance to come back up at all from that particular point, and faded immediately, right to the 50%. Actually, this one went even a little deeper to the 38, and then started to put in the extreme dips. And in this case, we went into a little bit of an oversold one, so it came across again and then moved to much higher stake. So this could still have a little more consolidation. We're starting to see lows rising at this particular point as the range narrows a bit. But still, this is not quite within a buy configuration. And we've been as high now as 2807 and right around 28. So I would expect in pre-market that if we end up lower there, that will be the target move back up during the trade day. And then we'll have to see where they want to take action from there. Because a lot of times on a breakout like that above the key number, if they sell it and it goes below, then we could see some much cleaner retracing. The interesting thing about yesterday and that is all the positive extremes just got filled back in nicely. So very orderly on this rise. We gotta like that because it really says that the algos are in very tight control of what's taking place right now, and that makes it very easy to just follow their lead and go with what they're doing, even if it's nothing dramatic. We gave both long and short signals with each of these. Every one of these gold candles that came in below the 100%, even if they were over the 50s, still produced the returns, as did the shorts from the positive extreme. So if you were flexible, you made out both directions. As always, though, put up any charts that are relevant and trade well. We'll talk again later.